Swadika. Good morning, ladies and gentlemen. My name is Supriya, and I'm delighted to be your host for today. I hope you have a great time last night. We have a party last night. Okay, let's see how the blockchain extravaganza impacts the online trading industry. Please give a warm welcome to the moderator, Malik Kotadia, the co-founder and chairman of Finnovation Labs, who will introduce the panel. Malik, the floor is yours. Thank
Thank
you.
you. Hi, everyone. Good morning, and welcome to day two of our IFX Expo. It's my pleasure to be back here again, so thank you to the organizers. I spoke here last year as well, and it's one of those events I enjoy talking and moderating at. Today, we are going to be talking and discussing about a theme which is both timely and relevant, and I'm sure many of you have both views and questions. So to discuss that with me, I am fortunate to have two very capable individuals here with diverse backgrounds. So without further ado, I will let them introduce themselves. I'll start with my very good friend, who wears multiple hats or who has worn multiple hats in this space. So with you, and then Vinay.
Hi, everyone here. Good morning. My name is Om. I'm from Thailand. So my previous experience has been with the policy making on the crypto asset. So since 2017, I was with the Securities and Exchange Commission Thailand FinTech team, drafting the regulation related to digital assets in Thailand. And later on, moved to the private sectors where I joined broker and exchange company, subsidiaries of a Siam commercial bank here in Thailand to work on digital assets. And later on, moved on to become the head of operation of a global crypto exchange. And currently, I'm founding my own company. It's related to KYC, AML. We are building a tools to help bringing the Web3 world more trustworthy and also more confidence for people to use.
Thank you. Hi, this is Vinay. I started my career as a trader. Then I moved into fintech, building the trading algos. And as of today, I'm part of SGX Group when SGX acquired our company early last year. In SGX, I'm wearing multiple hats, but within the group. So I'm actually leading the initiative for FX and digital assets trading under the umbrella MaxxTrader and Max Digital. I'm also involved in a lot of blockchain slash crypto trading initiatives within SGX. What we do as our solution today is we virtually touch every market participant, whether it's banks, brokers, hedge fund, commodity houses, corporate. We give them a trading solution for them to access the market efficiently, price to their clients, risk manage the whole proposition, whether it is for FX or CFDs or digital assets. So that's what we do. I'm glad to be part of today's panel discussion. We'd like to talk about some of the projects which we're working on the blockchain side to see how we can contribute in building this ecosystem. Thank you, guys.
Thank you, Om and Vinay. So let's start with the first topic that I want to touch upon. And since we're talking about blockchain 4.0, I mean, these are all nice acronyms, right? 3.0, 4.0. Some people are talking about industry 5.0 as well. But let's try and, I always try and demystify things and take away the hype and the jargon and focus on facts and actual content, separating the noise from the hype. So when the hype of blockchain started a few years back, everybody jumped on the bandwagon, right? And I remember having, while I was still in banking in those days at Citibank, I remember having read a report, very widely touted report from the World Economic Forum, saying that by 2023, they expect 10% of the global GDP to be on blockchain. And then, of course, 2023 is here, and we are all sitting. Then some others came up with, kind of edits to that, saying 2027, 2028. But let's look at it very honestly. Here we are in 2023. Blockchain has now been around for almost 15 years as a technology DLT, and close to 8, 9 years, if not a decade, in the mainstream consciousness, the media. I mean, since 2015, almost everybody's been hearing or discussing or talking or trying to understand blockchain. So about a decade later, where are we vis-a-vis this whole ambitious projection that a large part of the global economy and a large part of institutional infrastructure will move to blockchain. So I would like to hear your perspectives. Vinay, we'll start with you and then Om.
Thank you. I mean, I think they say that Rome was not built in a day. I'm sure it was also not built in 10 years' time. So the thing is, when you talk about something as transformative as blockchain, it has merit and it's going to take time. Probably the project prediction which was done 10 years back was a speculative prediction based upon the potential of the technology. Having said that, we all have to be realistic. What has happened in these many years, we have got very successful use cases where you know that blockchain does play a role. It can actually transform the whole ecosystem. But we also have seen where some of the use cases were almost like a force fitting the model, and which led to a degree of disappointment, which led to a degree of madness also sometimes. And that's where the regulators were shying away to participate fully. But what I see today is there are more and more use cases where regulators are taking initiatives. You can see how cross-border payment, CBDC, stablecoin. I mean, look at Japan, how they have regulated the whole stablecoin market, and actually using the traditional players like SBI liquidity or GMO coins. So they're actually trying to regulate the market by using the traditional players. We were in Korea about 2 months back, and we see that how they are regulating the whole STO market by involving the capital market operators. So now regulator is playing a role. Back home in Singapore, MAS working with Temasek and SGX Group is actually working on multiple projects to make sure that blockchain reaches to its success story, whether it's a Project Obin or Guardian. In fact, in Project Guardian, we are participating where we are using our market node underlying blockchain technology. We are working with likes of HSBC to distribute the private wealth assets and likes of UOB to HSBC to issue and UOB to distribute that asset using the underlying technology of market node to settle the trade efficiently so that we can reduce the cycle from 10 to 2 days. So I personally feel blockchain is going to stay. The question which we need to solve for is whether we have got the right use cases to get the tangible value from that use case using blockchain.
Thank you, Vinay. And before I come to you, a couple of things which struck me from what you said. The first thing you said is Rome was not built in a day, and I agree. But there are many of us who've been in this space for long, and I have a friend of mine who likes to articulate it quite well. She says that crypto years in this industry are like dog years or cat years. Each year is equivalent to 6 or 7. So if we say,
It's a good one.
it's been around for 15 years, it's almost been around for a century in traditional technology terms. That's one. The other is, when technologies reach a tipping point, like AI, many of us, I mean, almost everybody has been bombarded by the endless AI hype in the last few months. And for those of us, perhaps you come from a similar educational background, like I also did engineering before my management. And when I was an engineering student 30 years back, even then we used to hear about machine learning and artificial neural networks. And also, it's not a new technology. It's been around for 50, 60 years. But then certain technologies reach a tipping point, and once the tipping point comes, perhaps in this case it was Chat GPT and that whole mania, suddenly everything flips in a matter of months. So blockchain certainly is not there yet. And you also mentioned an interesting thing, which I think is also relevant. I remember back in the peak of the hype in 2016, I think, at one of these conferences in Singapore at Marina Bay Sands, I heard one of the senior ministers in Singapore when he was asked this question about his views and the government views on blockchain. And this is not MAS, he was a minister. He had something interesting to say. He said it's an interesting solution in search of a problem. So 7 years later, how evolved have we become? Are we still at that point where it's a solution in search of a problem? And if you were to take, as I said, in dog years or cat years, 50 years have passed since then. So what's your view on that?
Yeah, I mean, we have been in this industry for a while, and the hype of blockchain has come and go. It always come and go. And if you've been following the trend, or you're not very close in the industry, perhaps like all you pay attention is all about, oh, where's the Bitcoin price going now? In 2019, 20 went up to the peak. Now last year it came down significantly. Now it doubled the time of last year. But I think that's kind of like miss the focus in terms of where blockchain technology can bring. As Vinay correctly point out, there are so many initiatives on the institutional side, on the regulator side, to try to figure out, right, like how do we balance between innovation, the excitement that blockchain can bring, whether it's democratizing access to finance, whether it's easing all these unnecessary steps within the transaction in the traditional way that we create like a bond, funds, administration, etc. And on the other hand, there's also the worry about, because in the past it has been such a hype where retail investor would rush into the space, speculate, and people stop talking about the true value of blockchain, but instead talking about meme coins, or how the price is going.
Shiba
Right?
Inu and
Shiba
whatnot.
Inu, Pepe, My Lady, very recently, right? The one that Elon Musk tweeted.
But that is what I say madness. And then madness leads to disappointment. And then
Yes.
everybody starts hating blockchain, which is not the right way to do.
Right. But the question then becomes, is that the true value of blockchain? Is that as an industry player, is it the direction that we're trying to push the industry forward? I think for us that has been here for a long time, what we're trying to really push is really more a sustainable way of pushing this technology to create very useful use case and make it realize its potential. The Guardian project, for example, in Singapore is one of the examples that try to utilize blockchain to solve the pain point in the current financial system today. We can see a lot of DeFi projects, even though it started with no regulation, now start to step in and then seek to be more compliant, for example. Aave start to have like permission pool, for example. And there are a few other protocols that later this year, you'll probably hear them announce. You need to do KYC before you come into our liquidity pool. And how does that gonna help? It's gonna bring ease of access to the blockchain. Let's say if you're an institution, the requirement within the regulation is that you have to know who are you interacting with or dealing with. And can you imagine a DeFi protocol that doesn't have that in place? If I'm an institution player, I'm probably not going to dare going in because I'm not sure my counterparty within that pool could be from sanctioned countries. And that's going to create so much trouble for me, for example. Other parts that needs to be put in place to actually make things work, right? For example, if I'm a fund, a hedge fund, for example, in Hong Kong, let's say, I want to gain exposure into Bitcoin. What do I need to do? First, perhaps I have to think, okay, how do I get into that at first? Am I going to centralized exchange? Well, with centralized exchange, you all have heard about FTX, right? You never know what's going to happen. Can you really trust them when you put your fund in there? Well, can I really go into DeFi? But if I go into DeFi, what do I need to have first? Well, non-custodial wallet. Where do I find those, right? All of these are fractions that prevents big players, right? Or people who really want to capture or utilize benefit from the technology or from this industry to really go in. Now, we start seeing a lot of players try to facilitate, despite a lot of news lately about the crackdown of crypto exchange in the US, be it Binance, be it to Coinbase. Just last week, you probably have heard BlackRock filed for ETF application, a spot Bitcoin ETF application. And I think that's going to bring the industry together whereby, well, if I'm a fund, now I really don't need to open my non-custodial wallet. I do not really need to figure out how crypto accounting gonna work differently than the current accounting that I'm doing. I can have exposure to these kind of instruments. So the way that I see the industry evolve in the future is really how we realize the capability of blockchain. It cannot just be from the crypto industry alone, but it has to come from the traditional finance industry, in this institution player, and also initiative from regulators, particularly how are you going to on-ramp and off-ramp and also connect back to the banking ecosystem, right, from the crypto ecosystem. I think those are the pieces that I would say we are still figuring it out. And different parts of the world, there are many schemes, different type of regulation. Some could lead to regulatory arbitrage. That will still exists. But there will be players that emerge that support this ecosystem and look to build this ecosystem together that goes beyond just speculation.
Thank you both. You both have covered so many aspects of this. It's almost like 5 or 6 different branches, and now I'm left wondering which one should I, touch upon now. But so I'll take a slight detour. And before that, if I had to distill, all the amazing stuff that both of you just said, the distillation for me is from an institutional adoption standpoint. We've come a long way, but there's still a long way to go. There are still many parts of the puzzle, and those questions still remain open. I think from what you said, again and again, it was playing in my head because I have spent a long time in my career in banking, and we were obsessed with customer experience, simplicity and customer experience, and that certainly does not seem to be the case here. But let's touch upon another topic that both of you spoke about. You spoke about cross-border payment solutions. You spoke about democratizing access to finance. And I think one of the original ideas, ideals, thoughts, aims of blockchain and the decentralized ledger technology as a foundational technology per se was about democratizing initially money, but at least now access to finance. And we know for whatever reasons, I'll not touch upon that, banks and traditional finance are somehow not able to touch upon or cover the entire section or all sections of the population, depending on the World Bank or ADB or whichever report you read. We're still talking about more than 1 billion individuals or billion adults who are excluded from the mainstream financial system. And people have looked up to this technology, even tokens in whatever forms, as a possible solution. So I want to hear your views on that with a focus on payments, cross-border payments, micro-payments, because people said one of the killer apps of blockchain could be micro-payments because it reduces friction. And now you spoke about cross-border, and the BIS has been leading some of these initiatives with central banks. So the M-Bridge or the multi-bridge project, which brings together central bank digital currencies of various central banks. So I would like both of you to shed some light on whether this possible use case is indeed one of those killer apps which is coming to life, or this is yet another hype which will fizzle out. We'll start with you now.
Sure. So in terms of utilizing blockchain for payment, for Thailand, the Bank of Thailand has actually been exploring this solution ways back, starting with wholesale payment. But when it comes to retail payment, for example, because the current system in Thailand works so well, I know maybe you've been around and you just go with your phone and you can use the prompt pay system, right? The question is still remains like, oh, okay, like because the current system is so good, if we're going to replace the entire system that's already working with blockchain, is it really working? Right. So, I mean, this kind of question, I think, still linger around like people who decide on the policy, on how to implement the technology itself. However, there are still rooms, right? I think it's important that like for this innovation, you first have a room to try it out. So how the Bank of Thailand actually try to implement this is that they would open for a sandbox program where if you're either incumbent, either a startup, you can come and then experiment in this sandbox. I'm sure Vinay can tell you more. With the MAS, it's similar where they have the sandbox space and also created a program where like the business entities can participate as well. So I think like with this kind of collaboration, right, with only this type that we are willing to explore together, that like we can realize the benefit of this technology and how it can change the landscape. It's not shutting the door from day one, but let's see how it can work.
So, sorry, Vinay, before I come to you, and I want to just expand on Aum's point, so maybe you can address that as well. She spoke about sandboxes, and we know many central banks, starting with the FCA in UK, and then of course MAS was one of the pioneers. Bank of Thailand has been doing pioneering work. Sandboxes have now again been around, and pardon my playing the devil's advocate at times of being a skeptic. I've been in this space for so long that some of these you keep hearing and hearing and hearing at conferences every year. So sandboxes have been around. They are a great way. Yes, it's a safe space to, rather than jumping all in and then maybe having potential disasters, you go slow and steady. But now sandboxes have also been around for 6 to 7 years. How and where and when, if at all, do we evolve from pilots and sandboxes to real life use cases? And honestly, if I were to say so, the only real at scale, and it's not even really at scale, but at whatever scale project that I can think of, at least from a CBDC and an alternative payment system perspective, is the digital yuan. I have not seen any other solution. So what are your views on that?
But again, I think what you said earlier was a good point that at the end of the day, we have to see when are we hitting the tipping point. Yes, use cases has been there, and there was a definitely a merit in, let's say, having using blockchain as a way to kind of facilitate the within the country, or let's say cross-border payment structure. And it actually has helped few places. If you see some of the remote countries where actually the question has always been that when can you get the unbanked serviced. And I think in those areas where you see whether it's Ghana or Nigeria or let's say Afghanistan, when this kind of whole Taliban thing happened, when the war happened in Ukraine, actually this whole cross-border or remittances or let's say use of blockchain to transfer money did help in many use cases. So it's the question is all about that, going back to the old point, are we force fitting the model or are we really, really trying to find a legit use case to bring in efficiency? And again, sometimes we just get caught up into this whole global blockchain extravaganza. If we just kind of de-link this, that what problem we have to solve. I mean, look at India. In India, actually, for internal transaction, you don't need a blockchain. It is very, very, very efficient by UPI. Look at Singapore with the pay now setup. You literally don't need a blockchain because yeah, everybody say, with blockchain I can stay anonymous. I don't need to share my details. I can get all the privacy. Virtually with your mobile phone number, without even exposing your bank account number, you can transfer money. Thailand is a good example. And now there are a lot of initiatives which are happening, which are actually piggybacking on these well-proven network of UPI, Pay Now, Prompt Pay, connecting them together to facilitate the cross-border kind of a payment. Now, obviously, blockchain will play a role in this also, which is what MAS has taken a massive initiative by working globally with a lot of central banks across multiple projects, whether the project Ubin Plus or project Mariana or project Nexus. And the whole idea is that how do I reduce the whole friction which we have in the cross-border, working with several central banks and tapping into their existing internal payment kind of a system. And a case in point is that today, as per one of the global report, the cost of remittances is actually more than 6% of the transferred value. And aim from MAS point of view, which is actually they have a research paper for that, is that they want to get it under 3% and a settlement which can happen under 60 seconds to bring in that kind of efficiency. So we all have to aim for the sky and then see if we can land up at the moon. But again, until we don't aim for a sky, there's no way you're going to stay on the earth only.
Thank you. So I think two things come about from both your articulations. One is that uh, obviously central banks or BIS or any multilateral entity does look at the fact that why fix what ain't broken or what is working really well. And I think you both gave three examples. I love those three examples. UPI in India, Prompt Pay in Thailand, or Pay Now in Singapore. Super efficient payment solutions. And there are many others. Right now, even in Philippines, you have InstaPay and many others, which are real-time payment systems. So they've solved the problem, so why reinvent the wheel? On the other hand, I can think of something like, perhaps, Aun, you can add more to it, Project Bakong in Cambodia, which was supposed to be, where you don't have the infrastructure, you build something ground up with a new technology. So I think that part is well recognized. And you also spoke about cross-border. So clearly one thing is emerging is that cross-border payments, reducing friction, reducing cost, reducing time, increasing transparency. These are all areas where blockchain can finally live up to its potential and its promise and solve real problems and also leverage its own strength. So rather than being an elegant solution in search of a problem, the elegant solution can actually solve a problem which only it can solve. And blockchain by its very architecture is global. So why not use it for cross-border when it enables more efficient sharing of tokens or whatever information or even transaction data. So thank you for articulating that in a very crisp and simple manner for our audience. I'm going to go next to something which I definitely want to touch upon. I had a chat briefly with Aum yesterday at the fireside chat, but I want to touch that up again. I think many folks, especially in this industry, have been quite traumatized in the last 18 months by what has been going on. People have given it nice names like Crypto Winter 2.0. I'm sure all of us lived through the first crypto winter in 2018 as well. And I think that happens for any industry. When you have too much irrational exuberance, the crash is bound to happen. And things have evolved in this industry, at least from my perspective, significantly from the first crypto winter to now in these 5 years. But what is also a fact and an undeniable fact is the macroeconomic landscape is completely different. So when the industry went into that ICO hype in 2016, 17, crash landed, and then emerged from it in 2019, the macroeconomic landscape was pretty much the same. The interest rate regime was still the same. The liquidity situation was still the same. The Fed's policies, barring a little bit of tweaking here and there, was still the same. Now, in the last perhaps 1 year, we have seen one of the most dramatic interest rate tightenings and liquidity tightenings and rate hikes that the Fed has done in the last 40 years. Certainly in my lifetime, I have not seen anything like this. Perhaps older generations can remember something from the 70s and the oil shock and all. So when we talk about emerging from the crypto winter 2.0 and the future of digital assets, the future of tokens, cryptos, both as assets, as digital assets, but also as more efficient transaction systems, in an era where risk-free rates are 5.5% that the Fed you get on Fed treasuries. How does this affect the future of this industry over the next maybe 2 to 3 years or even 5 years? When I will start with you and
I mean, again, because you're talking about the interest rate cycle, I personally feel that this line between the whole crypto assets, crypto native versus TradFi assets, TradFi let's say native kind of ecosystem is thinning, and it has to actually thin further. It should become interchangeable. We should stop thinking from the lenses that whether this is a crypto native, because when interest rate cycle like this, it is gonna hit hard every asset class, and we have seen that for crypto also, and that is actually good for in the industry. Why? Because now crypto actually becomes more mainframe kind of an asset. We are in this conference where we are obviously, the participants are a lot more towards the financial services. That's why I'm going to keep it to finance only. What is happening is, what we see when we go to our, let's say, 250 plus TradFi client, they really want to actually trade crypto as an asset class. They see this as an extension of what they have been doing for last 100, 200 years, which is starting from equities to futures to fixed income to precious metal to commodities to now crypto asset. They actually come to us and they say that, when are you offering the crypto solution, so that actually without actually hunting out, to your earlier point, I have a very seamless way to take an exposure in crypto asset. And because it has become so macro, that it actually has become a mechanism to literally take a view on the market. And that is what, let's say, we're also aiming for. When we build the whole Max digital solution, we thought that we have a good base of 250 clients, and under SGX, we have a base of 2,800 clients. And if these clients are saying that, how do I trace the asset class? What is the best way to trace this asset class? Do we have a ready-made solution or not? And that's what we're aiming for. Now, this consolidation, which is happening because of the crypto winter, is actually fast-tracking that process. Because some of these traditional finance providers, or let's say traders, were experimenting with rather crypto native ideas. Now they're saying that, okay, I expect the whole ecosystem to improve. I want the traditional market makers to price me on crypto. I want traditional prime brokers to settle the trade for me. And I want traditional asset manager to offer me a solution for that. Like launching the Bitcoin ETF from BlackRock, or let's say the application, is a good step forward. So I actually see this as a good thing happening to the industry. Like last year when I was pitching to some of our hedge fund clients, they said that, you know what, Vinay, the main risk is that who I can face as a counterparty. And I gave some names, and I was very wrong. Many of those names are not there. So they said that, oh, so we have to solve the problem. And this is exactly what is happening, that in crypto, now people are trying to solve that counterparty risk problem. Like we are running a project under SGX where we're trying to create a marketplace where the two market participants can come and trade in a very C5 fashion, because that brings the rather good liquidity, use of different kind of a trading features, more stable and robust infrastructure. But we are mixing this or marrying this with the DeFi concept of having a self-custody model. So we are working with certain channel partners to create an off-exchange model where you hold the asset, but you come to us to trade the asset in a more efficient way. So I personally feel this crypto winter is good because it is allowing and putting, let's say, pressure on the traditional finance guys to take a step forward and make things happen.
Thank you. So, before I come to you, let me take a couple of points from what Vinay said. TradFi emerging or coming into custody solutions for crypto tokens or crypto assets as well. And crypto is now well regarded, at least by institutions, as clearly an asset, an alternative risk asset. I used to call it the best way to define Bitcoin from all the regulatory ambiguity is like digital gold. So I think more and more people are seeing it that way, or land, because it is scarce. That on one hand, and on the other hand, we are talking about this idea of, you know, we can talk about institutions coming in, and we spoke about BlackRock coming up with an ETF. So, this might sound like a slightly loaded question, and I'm assuming there are no maximalists here in this room to take violent objections to what I'm going to say here. But are we now really moving? I mean, for some of us who remember the earliest days of Bitcoin and that white paper of Satoshi, it was supposed to be as much a political statement as it was about an alternative payment or monetary system. It was a rebellion against the mainstream system coming out after the 2008-9 global financial crisis. And now we are talking about BlackRock, the largest asset manager, coming up with an ETF, which will probably truly democratize access to finance for alternative asset classes. Is that the future? Has crypto really evolved or moved away from being a truly decentralized people's solution to now firmly sitting with institutions? So it's really now become more of, you can say it's CeFi entering into DeFi, but is CeFi quote unquote hijacking, taking over? I don't like to use such strong terms, but is well embedded into it. Let's put it this way.
Wow, that's a really good question. I mean, the way I see it, right? Like not only what Vinay mentioned as well. Tradition, you can bring the best from both worlds, both the TradeFi and DeFi, and putting it together. On the CeFi side, maybe it's more of the better user experience, more efficient way to do it. On the DeFi side, it's more of the transparency, right? And also perhaps expand further access to people who haven't been able to access it before. So why not mixing the best of both worlds together? I think that's the initiative from both the CeFi side and also the DeFi players as well. On the CeFi side, not only the ETF, Deutsche Bank just also recently applied for a custodian license, regulated crypto custody license in Germany. So you can see they're really stepping in. On the DeFi side, as I mentioned, right, Aave start to have like this permission liquidity pool. Many other protocols are following. Some protocols are applying the basics that, as we know it in TradeFi, which is just, do you know your customer? Do you have the measures to address the KYC AML to put in place to making sure that, okay, people you're interacting with has been screened, and if there's any problem, we can trace them, right? So these are the measures that I think there are initiatives from both sides that try to come together and meet somewhere in the middle. And as Vinay mentioned, there must be the right tipping point. I think we're still trying to find where's the right balance to strike in between. However, I think we need to remember there are different type of people like all over the world, right? Some would just stick with CeFi. They will just they will not think, oh, crypto is a good asset class to invest whatsoever. They might still think there are gambling or there are very illicit activities. Those people still exist. They wouldn't touch anything crypto related. There are people who emerge from like the crypto world, youngster these days, for examples, that they don't even ever invest in their stocks just yet, but they might own Ethereum, they might own Bitcoin already. So these people might choose to stay there, or as they grow further, they want to take less risk related to return, they would step forward and then utilize what they learned from the crypto world in the traditional world as well. So I think in the future, things will be more seamless in a way that you can move across, you can walk from the CFI island to the DeFi island, or just choose to stay in between. I think what it brings is really options for people to choose where their positions are based on their current situation and risk appetite.
Thank you, Om. I know we have very limited time, so I'm going to ask you a very specific, pointed question. And again, pardon me, audience, I don't want to focus it only on one specific name. This is a more general question. We remember, we remember at the hype of the DeFi mania or the hype cycle into 2021, everybody was talking about liquidity pools and high yields and yield farming and all of that. And honestly, that was a time when I was doing a lot of shows on television. So every week I used to come and say the same thing to investors and warn. And I used to say, I have met so many of these so-called DeFi platforms. And the only question I ask them, because I come from a hardcore TradFi background where risk management is, the basic thing which has been ingrained into us. You talk about 25% yield or 20% yield or whatever. Where do you get this yield from? I understand the banking system. It takes deposits. It gives out loans and it makes that spread. You talk about yields. I did not get a single satisfactory answer then. So I used to always warn investors, don't get carried away with these high yield promises. Please try and go under the hood and understand where and how do they make those yields. And now you spoke about Aave coming up with this permission liquidity pool. So that's a good step in compliance and eliminating some of the bad actors and risk. But my fundamental question still remains, if you want to address that, where do they generate this yield? And going back to what I mentioned a while back, 2021 was still a very different era, 1% interest rate versus 20%. Now we are talking about 5% in US Treasury bonds. You can just close your eyes and put it there and not worry about it for whatever, 5 years, 10 years, 2 years. Even if a liquidity pool gives 10 or 15%, the first question is how? And the second question is how attractive would it be when your risk-free rates have completely changed? Either of you can take that.
I mean, again, we know that it was a classic question of having, overly leveraged transaction where somebody was lending that coin to somebody and then he was kind of creating another coin and lending it to somebody.
So basically, it was kiting, what we call in traditional finance,
Yeah,
right?
exactly.
Or a Ponzi scheme.
And I tell you, I went to a conference and I actually tried to understand this whole yield farming concept from the real providers. And I was asking very simple question. I have my fiat dollar, and then you have your stable coin. This gives me, because that was a low interest era, a year and a half back, this gives me virtually 0% or 10 cents or 20 cents, and this is giving me 9%. How? And actually, nobody gave me an answer how, because there was no answer. The answer was that let me take the fiat money, put into this black box of crypto world, and try to lend it and lend it and lend it, over lever it, and every time you create a multiple of that, and suddenly your zero become one, one become five, five become 10, 10 become 20, and it becomes so attractive that we all get attracted to. To be honest, even I was this close because I get tempted, and I'm a trader. I started my career as a trader. I was having a chat with my fellow trader, and he's like, Vinay, are you stupid? I like, yeah, I'm not stupid. I was just getting carried away. And if I can get carried away by having a background in trading, imagine anybody could get carried away. When you get that, oh, it's an easy 20%, 30% yield. Why not? It's always a question of why not. It's just that whether you are, at what stage you're starting. Are you starting at the start of the bubble? You are starting at the end of the bubble. And probably people who were getting carried away was 18, 20% was the end of the bubble. And it did burst. So that's what we have to be careful.
It almost reminds me, for those of you who remember those days and come from TradFi, the whole CDO, CLO bubble of 2007 to 2009, right? That's what this is. So we have very limited time. I do want to open the floor for maybe one audience question we can take if anyone has a question for our very knowledgeable panelists. No, don't feel shy if anyone has a question. Otherwise, okay. So we just have a minute. I'll ask for your closing comments very quickly. And this is where I like to play crystal ball gazing, usually with my panelists. So I'm going to give you three choices, three options to each of you. Let's say the year is 2027, let's say, or 2028, 5 years from now, realistic time frame, reasonable time frame. I'm giving you three scenarios. One is with the macroeconomic landscape having changed and all these scams which happened, loss of even investor confidence. Scenario 1 is the really gloomy scenario. Uh, Crypto dies and digital assets kind of becomes just an also ran thing. Scenario 2 is where we have 1 billion wallets and 1 billion users in the world, and it really enters the mainstream, and everybody is buying Bitcoin ETF, and everybody has downloaded a crypto wallet, and it becomes as traditional money as traditional could be, powered partly also by CBDCs and maybe the likes of digital yuan, which reach hundreds of millions of users. And the third is somewhere in between, where it is growing, but it has not reached a tipping point yet. Choose, in your view, crystal ball gazing, option 1, option 2, or option 3. No right or wrong answers here, just your views.
As someone who's been in the industry and really believe in technology, I really believe we could get to option 2. However, there are so many measures in place, steps that we could take. As Vinay said, Rome does not build in one day, right? And not just one person or one company can build Rome altogether. We need industry effort, like working together to get us there.
So almost chosen the safer option, option B.
So I would say that if you're giving me a 5-year horizon, I'll take option 3, somewhere in between. If you take a 10-year horizon, probably I'll go for option 1.75, which is why somewhere in, which is like your $1 billion number. So I not
No,
like
I didn't mean $1 billion. I meant 1 billion users.
1 billion user number. So but I'll just go for about 1.75, not 2.
Okay. So with that, we come to the end of our time. I really enjoyed this discussion. So thank you both for your pretty open and scintillating insights at times. Thank you. I hope you enjoyed from this discussion. Have a good rest of the day.
Thank you.
Thank you.
Thank you. Thank you, guys.